Hello and welcome to this edition of Closing Trades right here on ET Now. With me, Aisha Faridi. I've got Snehi Shah as well joining in on the show. And what a market this is turning out to be. A solid rebound at a time when, yes, you had a good handover from the US equity markets. But mind you, Asia hasn't quite kept up with that momentum. Nor is the case with the with the European equity markets, which are just about beginning to open. Our markets seem like a standalone case. We're right now at the highest point in the day. It's a solid 300-point move that you're seeing on expiry day for the Nifty, the weekly expiry that is. It's a solid 250 points higher for the Nifty futures at that 23,200 print. What's aiding the move today? Bharti all the way. Look at the move on the stock, 3.6% higher for Bharti as we speak right now. You are seeing a big move come in on some of the consumption plays, Unilever, Titan. These are all names along with Britannia, which are also holding out. BEL is looking very smart. From within the auto universe, there's Eicher and Bajaj Auto, which is looking smart, along with the Hero MotoCorp. And slight bit of rebound coming in on the technology names as well. So TCS and Infosys are both holding out in trade, as is the case with HCL Technologies. We'll talk about heavyweights. It's not just Bharti, but Reliance as well, which has made a dash and a good 1.6% of a move coming in, along with HDFC Bank, and they're duly contributing a whole lot to the Nifty move alone today. But Snehi, that's the case with the broader market too. It's holding up very smartly.
Absolutely, Asha, lots of stocks in focus. And at one point in the trading day, there was a slight bit of a dip that we saw coming in towards the broader end of the markets. But they seem to be on a recovering foot right now because the small cap index is up 0.7%. It's taken a fall from the day's highest point, but nonetheless, it's inching towards it. The mid cap index has also seen some stable recovery coming in because the mid cap index is also up 0.7%. And almost at the highest point of the trading day is where the mid cap index is right now. Some stocks that are in focus today from the broader end of the markets. First up, we have to talk about the action that we're seeing in the entire wires and cable segment. The case in point being the move coming in KEI Industries, Polycab, Havells. All of these stocks are taking a beating in today's trading session. Polycab is lower by 8%. You have KEI Industries as is trading with cuts of about 10% at one point in the trading day. In fact, it's worsened from there. It's a 14% cut coming in on KEI Industries as we speak. This is on the back of competition heating up in the wires and cable segment because Adani Group has forayed into that segment via their joint venture. Remember, a few days ago, you had this announcement coming in from Ultratech as well that they are foraying into this sector. So it's a back-to-back shock coming in for the wires and cables industry. And on the back of that, some heavyweights from that space are trading with double-digit cuts in today's trading session. Other than that, on the positive side, Garden Reach Shipbuilders is in focus. They've signed an MOU with the Public Works Department of Nagaland. So that's looking positive for the stock. That stock is up about 5% as we speak. And lastly, well, this stock continues to be beaten down in trade for the last couple of trading sessions. That's Ola Electric that we are talking about. A lot of regulatory hurdles coming its way. There's a mismatch now, according to agencies, on the registrations and the sales number that they have reported. The Maharashtra RTO is also conducting its independent inspections. There's been closure of showrooms across states in the country. So it's not looking good for Ola Electric, a 3% cut coming in on that stock. So that's some of the buzzers that we wish to highlight in trade as we speak, Asha.
Oh yeah, absolutely. Holding out well. Let's welcome on board our experts and figure out what the strength of the market today is indicating. We've got Gurmeet Chadha joining in on the fundamentals, Naresh Mirani, Kunal Bothra on the charts. Kunal, didn't think it's going to be that strong, right? The weekly expiry, it's holding a solid almost 300 points up in the green. What are you making of the levels right now?
I think touch wood to the market rally in the last 4 days, but it's been a different texture altogether. For the market's almost like a 1200 point plus recovery from 900 mark on the index towards 23,200 plus mark where we're trading right now. Absolutely strong, different texture of the markets almost on a daily basis. Today you're seeing different differentiated large cap names starting to participate. For example, names like Reliance Industries. Then you have larger cap names on the banking side which are starting to look attractive. And then the IT stocks, few of the larger cap names, they've started to make a comeback for themselves. So I believe that that's a very interesting sign because generally when you see large caps playing a relay race in a market rally, that generally indicates that the momentum shifts towards fresh large cap names, and the earlier ones which have moved up higher, they try to consolidate and then gradually move up higher. That's a typical sign of a trend. Now the interesting bit for the markets today is we've managed to break past about the 50 DMA, as well as the 23,000 mark. So I think on the back of these two important technical points, I would look at 23,000 as a strong short-term base for the index, and keeping that as a, say, a closing base stop loss. Traders can hold on to their long positions.
Okay, so hold on to long positions. It's an optimistic call coming in on the Nifty 50. This entire week, we've only seen the green on Nifty. So looking good, at least for the benchmarks in today's trade. But on that note, Gurmeet, hi, good afternoon and welcome to the show. Just want to get your view on a sector that's beaten down today, right? We were just talking about the wires and cables segment. What should an investor do if they're invested in this space right now, if they have some of these names like KEI or a Havells or a Polycab in their portfolio? Do you believe that this is a move that's coming in on the back of just this news flow? It's just a one-time shock that's coming in, and in the near future, there's room for everybody to win in this space? Or do you believe that these new entrants could be creating more of a havoc than the street is estimating at this point?
I think it's a bit of a parallel street is drawing what happened to Asian Paints when Birla came up with the Opus brand. But in paint, Asian Paint was holding more than 60% market share. This is a very fragmented industry, and if you take the market share in the organized segment, Polycab has upwards of 20%. But if you include the overall market, even their share would be 13-14%. Uh, Companies which and the margin wise also Polycab leads with almost 13% in cables and wires. So I think there's a bit of a concern there, and also because the valuations are stretched, you don't want to take chances in this market looking at what has happened to high valuation stock. So despite the fall, Polycab still trades at about 30-35 times forward. Uh, but my sense is there's a bit of a overreaction. Also, if you see earlier when Ultratech came, the stock corrected and we saw a bit of a recovery. Today again we have another announcement, and it's cable and wire business is very different from using your existing network of cement. If I were to say that the distribution network is completely different for electricals. But let's see over a period of time. I think the industry itself is likely to grow with surging power demand, revival in housing and infra. Cable and wires have multiple plays. And by the time I think these guys would be operational, the market would have also grown by another 15-20,000 crores from currently about, let's say, a lakh crore. So I don't see much concern in the long run, but medium term, I think it's more sentiment and seeing what happened to Asian Paints. I think the markets are reacting.
Other than that, Gurmeet, afternoon firstly, I mean, why are all these conglomerates rushing to the wires and cable space? I mean, one would have thought that a large part of the unorganized to organized play is already behind us, with, many listed players already out there with very dominant market shares led by, I think, Polycab. And other than that, one thought that this is a relatively low margin business. So then what sense does it make for Ultratech and Adani both to get into the sector?
No, I think it's a bit of a backward integration for both. Ultratech obviously has back-end integration with metals. They want to use synergy in terms of the reach they have. Adani also, if you see, they've done a JV where this particular JV will do whole host of other things than just cable and wires alone. But Aisha, what I've seen over a period of time, if conglomerates, diversify too much, it's not necessarily leads to wealth creation. And sticking to core is what helps, is what my reading has been over the long run. But as I said, coming to margin, I think it's a decent margin business. You look at margins with ROCE, you get like 12-13% margin business with a very good double digit ROE. So from a asset turnover basis, from a capital allocation basis, if you are able to grab some share, it may not be a bad call. But as I said, it's very different. It's just that it's not just a simple cable and wire, which it has a lot of brand appeal. Polycab in particular has a very good B2C network other than B2B. So I think in B2B, and that is why probably KEI is reacting more, because that relies more on B2B. Polycab also has now been able to build a very good brand from a B2C segment. Then you have FMEG also, which they are trying to scale up. But markets being markets, in bull markets we ignore bad news. In bear markets we ignore all the good news. So I think Polycab also got a 3,000 crore order recently from BSNL, I think, for Bihar Circle. So I think the size of the market, the industry itself is likely to grow high, early double digit, and probably the larger ones. And that's probably people want to capitalize on.
Coming in on the entire wires and cable space. Naresh, hi, and welcome to the show as well. Let's talk about the entire Nifty IT space, because I remember yesterday this was the biggest sectoral loser. Today it's the top sectoral gainer. It's been a very good recovery coming in for the IT segment just in 2 sessions of trade. Help us understand what levels you're spotting for this one and what's the outlook on the charts, at least for Nifty IT.
So, in the December-Jan period, which is where Nifty IT continued to outperform, that is over. It was sustaining well above the 200-day moving average, sustaining well, even made a new 52-week high back in December. Now that has turned, it has broken down. Going forward from this 36,000 odd levels, 38,500 to 39,500 would be a stiff resistance. So for now, it would become a market performer or rather underperformer going forward. So no more the leader IT, and closer to 39,500 would be a place one would actually look to go short at.
Okay, still going short, and yeah, given the move that you've seen on the entire wires and cables listed segment, Gurmeet is still of the view that it is a bear market. But let's move on and let's talk about Ola Electric. That's one stock which has really been under the fire, as the Ministry of Heavy Industries is seeking details now regarding the discrepancies between the company's reported sales and actual vehicle registrations. According to sources that are telling us, the MHI is set to send a second letter seeking clarifications with Ola Electric. Samir, of course, my colleague, is here with more details on what really is developing and brewing at Ola.
Well, it seems that the trouble is mounting for the EV player Ola Electric with each passing day. In a fresh development, sources have indicated that the Ministry of Heavy Industry is likely to send a second letter, sort of a reminder letter to the EV player, maybe by next week, asking them to share the details of the EV, the two-wheeler electric vehicle sold by Ola Electric, the sales number as well as the registration number. There are reports that suggest that there is a huge gap, there is a mismatch between the EV sold or the sales number as well as the EV registration number, the vehicles which are registered on Vahan portal. And based on these reports, the Ministry of Heavy Industry, it has come into action. The first letter was written by the Heavy Industry Ministry on 11th of March. So far, the EV player has not responded to that letter. And now it is to be understood that roughly around 2 weeks' time will be given to the EV player to reply to that letter. And if not done so, then a second or a reminder letter will be sent by the Heavy Industry Ministry, and then the further course of action will be decided. But if you go by the report that suggests that in the month of February, Ola Electric says that the sales number crossed 20,000 mark, whereas the vehicles which are registered on the Vahan portal were just around 8,500, less than 10,000. So there is a clear gap or sort of a mismatch, and that has raised the concerns of the government. And recently also, if you see, the Maharashtra government or even Maharashtra RTO carried out inspection at Ola Electric dealership, verifying the documents. A similar sort of exercise was done by the other states as well, whether it be Punjab or Madhya Pradesh. So it seems that the troubles for Ola Electric is mounting, and they have to give a lot of answers to all these questions to the government, also to the public as well.
Okay, thanks Samir for all of those details. Clearly trouble brewing at Ola Electric. That stock is lower by 3% as we speak. But as we slip into a short break, just hear out the word coming in from Anil Gupta, the CMD at KEI Industries. When we interacted with him a while ago, and he shared his view if there will be heightened competition in the wires and cables industry. This, of course, on the back of Ultratech's foray into the industry. Let's go across and listen in to what he was making of this space when this news flow broke out.
Our preparation is clear that first, our company is debt free. So it is the cost competitiveness which plays. We are competitive in our operations. We are very, very competitive in our raw material procurements, and our cost control is exemplary, and also our financial cost is zero. So even if Ultratech has a lot of cash, but we also do not borrow. So I don't see any reason to get feared. And nobody can take our market share or even our growth.
Well, holding up pretty okay. We're not just back at that 23,000 mark. We're building on quite nicely to that level on the weekly expiry day. still clinging on to that 23,200 print for the Nifty futures. Not just the benchmark indexes, but the broader market is equally lively, if not more. Look at moves like Bharat Forge, for instance, a solid 5.25% move there. Max Healthcare, quite interestingly, has been moving for the last two trading sessions. Today as well, it's put on another 4.5% in trade. Hindustan Copper has been going very strong. And some of these realty plays also have been making sporadic moves. Today, you've got Phoenix, which is actually holding up. And I think yesterday it was Prestige, which actually looked good. That said, you are seeing buying on some of these names from their 52-week lows. Quite a few sectors other than IT, of course, have seen quite a meaningful recovery coming in. And yeah, the entire defense pack, especially with regards to the recent order wins, that's really come to the fore once again. Gurmeet, post the recent correction, would you be looking at any of the defense or the shipbuilding names?
Yeah, I mean, valuations did see a correction, although some pockets are still stressed. I think what we are seeing is a global order getting reset. I think look at what the German parliament did. I think it's been a record budget approved both in infra and defense spending. And with the new world order, probably you will see one area where everybody would shore up investments is defense, especially EU. And India probably stands an opportunity both in, obviously we have our own domestic, cycle playing out. The defense minister spoke about this year being a reform year and a landmark year for defense. And then you have the EU opportunity. So I think, so we have solar industries in our portfolio that has smartly recovered from 8,000 odd lows on back of order wins on Pinaka rocket. Then we have Zen Technology in the portfolio. It saw a correction almost 50% from the highs, although the stock is still expensive. But they are guiding that full year they should be able to meet the numbers. So I think next quarter numbers are important. And we are also looking at Bharat Electronics in the portfolio. So you have to be selective here because the order books are long, and there's also some risk in terms of either order getting delayed or not getting or even getting cancelled. So you have to keep that in mind and do not pay only basis the order book which the industry was paying till last year.
That's a take coming in on a couple of these defense names. Of course, we have news coming in for Bharat Forge also today. That stock is doing well. It's been selected by the government for some gun artillery, so that's looking good for the stock. That stock is also up by 5%. Kunal, how is Bharat Forge looking like on the charts to you? Because it's been a while since we've seen this kind of a move coming in on the stock.
Yeah, in fact, yesterday on the Chartbusters, I had taken Bharat Forge as a discussion point because my sense is that the stock was ending a major 7 to 8 month of a consistent downtrend, and that too with the classical pattern of lower highs and lower lows consistently, almost 7 or 8 times in the past 7-8 months of this price correction. Bharat Forge had managed to cling on to that resistance as well as support trend line. And yesterday was the first day when you've seen the stock break past about that 1120, 1130 mark as well as the resistance trend line. This I believe could be potentially a very strong up move for Bharat Forge. And generally, we've seen that whenever stocks end their 7 to 7-8 month kind of a downtrending cycle, we look at least 2 to 3 months of a price rally or a recovery into these names and a retracement of almost 50%. So, which means from 1800 levels thereabout, which was the top or the recent swing high or the major swing high for Bharat Forge in 2024, towards the point when the stock went sub 1000. I think we could be looking at 1350 to 1400 as a broad target for Bharat Forge, which means potentially even from current levels of 1090 thereabouts, we could be looking at a substantial 10 to 15% up move at least over the next 1 to 3 months.
Gurmeet, before we let you go, other than of course defense and the spaces we talked about, the wires and cables, where else are you seeing buying opportunity?
I said that's to me?
Yeah, Gurmeet, to you.
Yeah. So I think financials, as I mentioned earlier, continue to look good. I think we've seen a clear change of RBI stance, not from an official stance, but both in terms of liquidity, both in terms of interest rates, and in terms of we saw a lot of tightening, both by RBI and SEBI. RBI in terms of loans, in terms of LCR guidelines. So I think the stance has changed now. They're looking at giving a more long roadway on a lot of regulatory guidelines. Then they've infused liquidity, which to me has been record liquidity infusion after a while. So initially the names get compressed a little bit, but over a period of time it will be, the cost of funds do come off. The deposit growth is slightly coming back now. So I think banks look good. We like some good quality NBFCs also, especially in housing finance and gold finance space. We like consumer discretionary spend because the consumption basket itself is undergoing a change. So whether those are airline stocks, we have Interglobe in our portfolio, some of the hotel stocks, including Indian Hotels and Lemon Tree. We recently also, because we were holding ITC, got ITC Hotels. So I think that looks at 30,000 crore odd market cap, it looks reasonably valued. And then we are looking at selectively auto because the leadership is not getting established. So in two wheelers, I think TVS is clearly leading now, both in exports, even in electric, iQube doing well, as well as the two wheelers, both motorcycles and bikes. Then you have M&M clearly dominating on SUVs. Their market share is back at 23%. I think this was a bit of an overreaction on Tesla's entry to India because the price points on which both operate are very different. Tractor, they are gaining market share and farm equipments. And even in auto ancillaries, we are seeing ones who are dependent on Europe under pressure and ones which are more domestic, which are more content per play, I think doing well, which is likes of Uno Minda, etc. So I think there probably the leadership is getting, differentiated. Hero also has had a lot of leadership exits in two-wheeler space. So selectively in auto, that also is technically a part of the consumption portfolio. And one last is the energy. I think I saw a beautiful article by Mr. Nandan Nilikani that energy is the next UPI. I think and that's one space I would closely watch because the country also needs a lot of power reforms other than just creating energy marketplaces.
Okay, Gurmeet, so bunch of positive calls on sectors as well as stocks coming in from Gurmeet. Thanks so much for that, Gurmeet. On that note, we'll let you go. But 30 minutes of trade left and time now to get some closing trade ideas. Kunal, what's your closing trade for the day?
So I'll go with a large cap name, Reliance Industries. Finally, the stock coming out of a breakout and potentially a consolidation breakout about the 1250 mark. So it looks like the stock should now be heading towards 1300 to 1350 range over the very near term. So a decent upside potential of another 5% swing for Reliance Industries.
Okay, buy call on Reliance from Kunal. Nuresh, what about you? What's your closing trade for the day?
So that would be about Nykaa. The stock has been sideways for the last 4 months and setting up for a breakout above the 170-75 mark, which has been a resistance. So risk reward trade here, preemptive buy. Once it sustains 172 odd levels, it should be a big breakout. So looking at it as a breakout move going forward towards 190, 200 also.
Reliance and Nykaa on Kunal and Naresh's radar. We'll take a very quick break, come right back. We'll continue tracking the last half an hour of trade this Thursday afternoon.
Hi there, welcome back to Closing Trades. We're holding up firmly. We've slipped slightly below the 23,200 level, but that's not an issue because we're just 10 or 12 odd points off the day's highest point, looking very solid when it comes to the Nifty. Still a 1.3% uptick coming in on that benchmark index for us. But let's welcome Sudeep Bandyopadhyay, the Group Chairman of IndiTrade Capital on show, and we have Kunal and Nuresh back with us on the show as usual. Sudeep, hi, good afternoon and thanks so much for joining us. I want to get your view on this entire auto space because, today we have news flow coming in from Ola Electric on one end. On the other side, over the last couple of days, we've seen major of auto players announcing price hikes that they'll be rolling in from next month. How much do you think this price hike could aid the bottom line of these auto companies for FY25? And what's the outlook on the sector in general?
I think the auto price hikes are definitely good news as far as the industry is concerned. Obviously, it kind of shows that there is demand. That's how the manufacturers are taking the risk of hiking prices. But I think they had very little option also with the cost inflation definitely eating into the margins. So they needed to do this hike, take this hike, and they have taken. So this is good news. Overall, I think we are a bit cautious. Of course, you talked about Ola Electric. I think that's a absolutely avoid at this stage. There are too many challenges and too many issues as far as that company is concerned, including the battery plant, which nobody is talking about. But that is going to take a lot of time to stabilize and start contributing. Apart from the challenges in their manufacturing, servicing, and even things like registration. So it's better to avoid Ola Electric. As far as other two-wheelers are concerned, I think, by and large, they're doing reasonably well. We have to keep focusing from long-term on Bajaj. I don't see much of a problem there. I think from a long-term perspective, I do like Bajaj Auto. As far as four-wheelers are concerned, at this stage, if somebody has to take a bet, I would still go for Maruti. Tata Motors is a avoid according to us. predominantly on the back of all these tariff war issues and how that will impact JLR volumes and JLR manufacturing. One has to see. So it's a little too premature to kind of start recommending or buying into Tata Motors. Maruti, on the back of secular growth story expected in India, I think can be a buy. Also, the price hike is good news.
Okay, that's the take coming in on autos right now. But a very interesting development happening right now as we speak. And Elon Musk's social media platform, X, has actually filed a petition in the Karnataka High Court against the Indian government overlooking or rather overblocking of content on the platform. In fact, the platform has challenged the use of Section 793 of the Information Technology Act. Sumita Kareed, my colleague, is here to tell us more about, firstly, what this issue and spat between Elon Musk's X and the Indian government is all about.
X, which is formerly Twitter, has filed a lawsuit against Centre's use of the IT Act, in fact, certain provisions of the IT Act and the Sahyog portal. Remember, Sahyog portal comes under the purview of the Ministry of Home Affairs. So let's take a look at which specific provision is X talking about in that lawsuit, a copy of which has been accessed by ET now. While the lawsuit is against Centre's use of Section 793B of the IT Act and how Centre is using it to block content, which is affecting, according to what the lawsuit states, it's affecting X's ability to operate in the country. It calls that these measures establish an unlawful and unregulated censorship mechanism in the country. Of course, X had faced a similar case in 2022 when it had actually challenged government's takedown orders in 2022 as well. And back then it had stated that it is against the basic principles of free speech and expression. Now, this petition also states that the Supreme Court has recognized 69A as a sole legal framework for blocking online content. In fact, what is X expecting now? X is expecting a restraining order against Centre's directions so far as its platform is concerned. Now, let's also understand the timing of this lawsuit that it is coming. Well, it's coming in at a time when the Centre has asked for an explanation from X, again, which is formerly Twitter, on how its Grok AI is functioning. In fact, there have been responses which have been generated by Grok AI on Twitter, which has created quite a flutter. And now the government has sought an explanation from the company on how Grok, which data sets is Grok trained on.
Okay, well, thanks, Sumita, for all of those details, and we'll keep you updated on this developing story on what pans out ahead for X and the Government of India. But interesting opinion coming in from market honcho Ravi Dharamshi. He details his investment mantra in the current market and asks investors to deploy money before regretting. As we slip into a short break, listen into what he had to say.
I'm hoping for revival on the private sector capex and maybe broad basing of the real estate cycle. If those confluence come through, maybe not now, but maybe 12 to 18 months from now, then I think you will regret the fact that you did not deploy money at this point of time. Again, see, even during COVID times, we did not know how the recovery was going to be. At that point of time, we all thought that, okay, it's uncertain, but the odds are in your favor. I get the same feeling even right now. Future is uncertain, but the odds are in your favor. If you have more than 3 years outlook, time to be building portfolio.
Hi there, welcome back to Closing Trades. Last few minutes left, rather last 10 minutes left of trade. Let's just take stock of what tomorrow's market session could look like. And Kunal, coming to you for just that, it's 4 consecutive sessions of gains coming in. We're bound to close above a 1% gain for our markets today also. Will this continue for tomorrow, and is this going to be an entire week of green for us?
Yeah, it should be, and I think so. There are multiple factors towards this, because this is the 6th straight month for the index. We've already had 5 straight months of negativity, which means we are looking to reverse that phenomena for the index this month. Then we are looking at 2 gaps being formed for the Nifty in this last 4 days, 4-5 days of the market recovery of 1000 plus points for the index. And gaps inherently act as strong support points for the index. They try and channel the index higher towards new resistance points, or at least the supports. They tend to move up higher. And the third and the most important phenomena is we are seeing the market breadth a lot more vibrant this time around as compared to what it was maybe in the first couple of days of the market rally. The India VIX is dropping by. I think this is the first day we're seeing almost like a 5 to 6% drop in the India VIX. We're almost sub 13 if I'm not wrong for the India VIX. That's another indicator that the market sentiment is starting to look a little bit more better than what it has been over the last 3-4 days of the market rally, and that generally sets in the pace for the index to move up higher. I think all what is required over here is that even if the indices they slow down the pace of the market rally or the absolute price up move for the indices, and even if we consolidate say 23,000 mark or about 23,000 levels for the next couple of days, that itself would probably open up the market breadth a lot more better.
Okay, open up the market breadth a lot more better. Sudeep, what is your recommendation when it comes to mid and small caps at large? I know, India's always been a stock-specific market, but, off late, post the recent correction, the safer approach was to stick with large caps. Would you say don't do that anymore? Don't put your eggs in one basket?
Well, Aisha, I believe in the stock specific, as you rightly said, and I think I continue with that view. There were definitely much more opportunities, and valuation-wise, large cap was looking much more attractive. But as things stand now, when the market has started its recovery, there are opportunities in mid cap, there are opportunities in large cap, and even in small cap. So one has to identify the pockets of opportunities and the right stock therein and buy. I do see distinct opportunities emerging once again in defense-related areas, particularly defense electronics. I think the rearmament of the world is happening and it's real. And with that, the defense electronics companies will play a massive role. Indian defense electronics companies, including the leader, Bharat Electronics, it looks fantastic. I think cement is a sector which is expected to do well, and it has started doing well. Third quarter results, the demand was weak, but the cost performance was fantastic. So the efficient cement companies improved margins, and now with demand picking up, I think it should be much, much better for pretty much all the leading cement companies. So that's another sector. Ultratech definitely can be looked at there. Also, I would say that power and power-related companies do look good from a long-term structural point of view. So, you can pick up an NTPC, which is the leader in power generation, or you can go for the power financials, REC, PFC, or even IREDA. So I think, like this, we can keep talking. BFSI, of course, does look good, and SBI definitely at current valuation from a long-term perspective look definitely good. LIC offers an attractive proposition with imminent launch of their medical insurance business. So there are opportunities sitting for us if you look at the market from 1 year perspective. And of course, India is a good market for long term even now.
Okay, that's the take coming in. Some interesting ideas coming in there. Just looking at the strength in some of these, liquid names, and Bharat Forge definitely one such case in point. That's really been holding up well. There's Max Healthcare higher by 4.5%. Bharti, of course, is going very strong. It's already made it to that 1700 level. Phoenix Limited, Birla Soft, all of these names are looking very smart indeed. So the other pocket which has corrected in this recent fall has also been realty. Many are sort of questioning as to how there is going to be a lull till new capacity gets added, at least in some of the tier 1 metro cities and the slightly more pricier segment, if you will. Within that, do you think any of the realty names can be bought right now after the fall?
Well, definitely. I think there are two distinct segments. One is commercial, one is residential. I think the commercial is seeing a remarkable revival and demand growth, and obviously that's getting reflected in Phoenix Realty's share price and upward movement. Oberoi Realty also is adding a lot of commercial to its residential basket. So commercial is looking very good for the near future, and one can look at both Oberoi Realty and Phoenix from that perspective. Fundamentally, from a long-term perspective, I do like DLF as well. The kind of land bank they have and the kind of potential they are sitting on, I think is huge. From a long-term perspective at current valuation, it definitely does look good. Macrotech developers from a long-term perspective, considering the way they have been going about the buildings, they're building their portfolio, I think demands attention and again can be picked up from a long-term perspective.
So much for all of those views as well as stock-specific views on the real estate sector coming in. On that note, we'll let you go. Thanks once again for joining us. But last few minutes left of trade. Time now to get the buy today, sell tomorrow, the BTST ideas out of the way. Naresh, coming...
Nykaa, the stock is setting up for a breakout. Stop loss at 166, target price of 175. Second is a buy on NMDC, which broke out yesterday. Looks good for a further move towards 71, 72. Stop loss at 68.
And Kunal, what about you? What's the BTST call for the day?
So the first was about Axis Bank. After quite some time, the stock looking attractive and heading towards a potential breakout about the 1050 plus mark. So would look out for targets in the range of 1100. Stop loss at 1040. SBI Cards, after almost 2 weeks of price consolidation, is also heading towards a flag pattern breakout. So would look out for targets in the range of 900. Stop loss to be kept at 830.
Okay, that's some interesting BTST ideas coming in there. But Kunal, what is it that you're making of this move on IT? Does it seem like it's going to be short-lived, or do you think, given how strong the rebound in the market is, it will pick up oversold sectors like IT also along with it?
Yeah, it should pick up for the oversold sectors, and there comes a point where these stocks, indices, they come back towards their 20-hour moving averages. In some cases, it's 20-day moving averages, depending on the intensity of the price correction. And I think in that sense, you could probably be looking at, say, from current levels of 36,000 thereabouts for the IT index, we could be looking at 37,000, 37,200 broadly as a near-term target range for the IT index. And that could probably push up maybe the larger cap IT stocks by another 3% to 5% kind of a margin. So my expectation, as I was discussing in the morning also, that there comes a phase where the underperforming sectors, even these sectors, they eventually make a comeback, because the performing sectors and the stocks which have been doing pretty well over the last 3-4 days, they generally get to see a more of a fatigue at some point of time, or they tend to go into a consolidation. In that sense, the underperforming stocks, they pick up. My belief is that potentially over the next 2 days or 3 days max, I would expect a 3 to 5% swing into many of these large cap IT names.
Okay, and just as we wrap up, Naresh, want to get a quick view of yours on the Nifty Bank space. We're above 50,000, we're barely holding above that. Do you believe this is a sustainable level for us to hold on to when it comes to Nifty Bank?
So maybe a day or two of pause, given that we've seen 3 strong days on the bank Nifty as such. But overall, the structure is positive. Many stocks in the banking space are giving breakouts. HDFC Bank also breaking out today about 1750. So bias is positive, but for now, maybe a day of pause could be okay.
Thanks for that view coming in, and Kunal, Naresh, thanks so much for joining us. On that note, let's start wrapping up and winding down for the day, and it's been a good day coming in for the Nifty, a 1.2% uptick coming in. We've slipped slightly below the 23,200 mark, but nonetheless, it's been a very positive trading day for us. Sensex also in tandem with the Nifty, a 1.2% uptick coming in on that index as well. Advance decline ratio in the favor of the advances today, because the market breadth is also looking solid. And on the back of this, the India VIX is down 5.5%. We're around the 12.5 mark for India VIX. It's a very healthy move coming in for India VIX as well. The broader markets have done well today, but they have not outperformed the benchmarks. That's not been the trend for the last couple of trading sessions. But nonetheless, they've managed to end in the green, a 0.6% jump for the mid-cap index, and similar moves coming in for the small-cap index as well. It's been names like Bharti Airtel, Titan, Britannia, BEL, Aisha, BPCL that have been giving the leg up to the Nifty today. However, on the flip side, names like IndusInd Bank, Bajaj Finance and Trent continue to weigh on the index slightly. In terms of sectoral gainers and losers in today's trading session, all your sectors have ended the day in the green, so it's looking positive on that front as well. Autos have led the charge with a 1.5% uptick coming in, followed by Nifty FMCG, Metal, Realty, IT, Pharma, Energy, Nifty Bank and PSU Bank. Even PSU Bank, that's your least sectoral gainer, is up 0.3% in today's trade. So very solid moves coming in on that front as well. A couple of stocks that have been in focus the entire day today, of course, Indigo on the back of its analyst meet takeaways. You have a couple of brokerage notes coming in. That stock is holding up smartly, a 2% gain. NCC on the back of a 1296 crore rupee order coming in. So that stock is also holding up pretty smartly, a 2.5% gain over there. Garden Reach has signed an MOU with the PWD Department of Nagaland. That stock is up 4.5%. Bharti Airtel has become Kerala's leading telecom operator with most network sites in the state. Bharti Airtel, very smart gain and a boost for the Nifty index as well. Overall, a 4% gain coming in on this stock. Other than this, a few other stocks that have been focused today. IOB on the bank of its fundraising approval and the QIP. So that stock slightly under pressure, a 2% cut coming in. NHPC has approved their borrowing plan to raise 6,300, so that stock was in focus. Lastly, the wires and cable space on the back of Adani's foray into that space, so double-digit cuts coming in for Havel, Polycabs, and a lot of other stocks in today's trading session. And of course, trouble continues to mount for Ola Electric. But that's how we are shutting shop for the day. Very good moves coming in for the Nifty. We'll wrap it up on this edition of Closing Trades. Thanks so much for watching.